All right, gang, let's do it. Time to answer your questions. Stephanie Link, you're first. Dave in Liverpool, the UK, writing to you.
Wow.
Likes Accenture at 32 times earnings. What do you think of DXC Technology, which I'm thinking of buying at 25 bucks?
I like DXC. I actually made it my final trade about a month ago. They've done a really good job in a very challenging environment. So very tough top line, but I think the book-to-bill north of 1 over the last couple of quarters sets them up well for 2021. And they have done a really good job in terms of cost controls. So it's one I like. And look, I like Accenture. I don't own Accenture because it is at 32 times. If I'm going to play in that space, which I am, I'm doing it through IBM. But DXC would be my number 2 choice.
Okay. Joe, to you from, we're staying overseas. Martin in Ireland, has a video question for you.
Hi, my name is Martin Gillen and I live on the west coast of Ireland, and I invested in Uber shares a number of months ago. Given the recent UK decision on driver contracts and the fall in the share price, do you think they're a good buy at this level? Thank you.
All right, Joe, legit question. What's the answer?
Well, Martin, thank you for that question. I do own Uber shares, and yes, even despite the ruling in the UK, I think it is a buy moving forward. I think it'll exceed the $64 high. If you think about the way that Uber is exiting from the pandemic, they're exiting with a more diversified platform. It's not just about ride sharing, it's about meal delivery. They've strengthened the balance sheet, which is so incredibly important. But ultimately, this is a mobility play and a return to mobility. So Prop 22, I think, was more relevant back in November. That went their way. I wouldn't use the ruling in UK to act as a headwind for you investing further. I'd actually buy more.
Okay. Pete, to you from Mark in Seattle. What about Bristol Myers? Bristol Myers and Pfizer down lately. Which one looks the most attractive to you right now?
Well, you know what? It depends on what your risk tolerance is, Scott. I would say Bristol Myers, if you have a little bit more risk tolerance. I think that has more of a feel of a biotech company because of what they've done over the years to change the company itself versus a Pfizer that's kind of slow and steady and pulls back and has some runs here and there. But generally, it's just going to be a relatively flat line. I use these oftentimes, Scott, as buy-right type stocks. In other words, I'm buying the stock, selling calls against it, and collecting the premium that I get from the dividend. You can enhance that dividend yield because they do stay in a very tight range. You got a little bit more volatility, I think, with Bristol Myers. So if you've got that kind of tolerance, I think that's the better performer.
All right. Lastly, Jason, to you, Alan in California, Palo Alto. Buy, sell, hold. What do you think?
Yeah, so I like Palo. I think about, the cybersecurity theme is going to remain to be a very important theme here now and even post-pandemic. 24.5% revenue growth in the last quarter, some decent guidance, and they work with all the major players. So I think this is a decent buy here, as I think that the environment is still a very important place.